Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Rhoads. He's the head of derivatives research over at the TABB Group. It's great to have you back with me
Always
in
happy
New
to see
York.
you.
And I was going over your Twitter feed, like I check in every day, just to see what's going on in the world of derivatives and cryptocurrency. And you had a great piece about understanding futures the right way.
Oh, especially with respect to VIX,
Yes.
and my baby VIX. And that's because you can't, just as a quick review, you can't trade spot VIX. It's just you can't get that exposure. Even the ETP that's out there does not give you exposure to spot VIX. So the people that are really putting money to work are trading the futures. And the action on the futures deviates from spot VIX because there's no fair value relationship there. And the action in the futures is really in anticipation of where pretty smart money thinks VIX is going. Mm-hmm. So if you see something in the market that tells you that we think VIX is going lower,
right.
What does it take for VIX to go lower? It takes the stock market to go higher. So it's a great indicator, but using VIX by itself in conjunction with the S&P 500 is
right.
You got to take it a step further.
Well, I mean, it makes sense if you look at any index, right? Mm-hmm. Whether it's SPX, NDX, right?
Yeah.
If you don't look at the futures to see what it's suggesting going forward, like you say, it's bringing a knife to a gunfight, basically.
Exactly.
So, exactly. When you hear things in financial media, the VIX is here. Mm-hmm. This is, well, how would you know if you don't look at the futures? It seems very intuitive.
Yeah, I think that if you start to do something that's a second step and you're trying to explain something in 30 seconds, mm-hmm. It becomes pretty difficult to explain why you should care about the futures. And people that aren't necessarily trading VIX from day to day may think that SIBO wants you to look at the futures because they want you to trade it, not because there's actually information there. But there's most definitely mm-hmm. a lot of information in the VIX futures contracts. There's a lot of information in the futures contracts for any market that's out there. Mm-hmm. You can go to the CFTC. You can get how hedged are institutions right now with respect to the S&P 500 using the futures. How is leveraged money, which I always think of as hedge funds, how are they positioned in any futures market? And you can see that from week to week. It's a little delayed, but it's a lot of information there.
So when you look at a market right now, what are the futures implying? I mean, the market has been a little bit crazy this week.
Yeah.
We've seen significant swings. We could be, up 300 on the Dow in the morning and then down 200 at the end of the day. Pretty substantial moves. What are the futures implying as we look to the first quarter?
We continue to go from a backwardation to kind of flat. And when we hit flat, that's really, if you think about it, if the futures contract is trading right in line with the spot VIX, nobody's really got an opinion at the moment. Mm-hmm. And the tweet that you were talking about, that's something that I referred to, was we had the flattest VIX curve in some time. And it seems like when the curve flattens out, that's when we suddenly get a big move in one direction or another. Now, I wish I could put two and two together and tell you what direction it's going to be.
Right.
But those big moves seem to come in conjunction, even intraday, in conjunction with a flattening of the VIX curve.
You know what? And it just reminded me, I think you put this tweet out also, VXX is
yes.
going away.
I can't believe it's been
10 years.
That one just.
But there'll be a product, VXXB.
VXXB was listed almost a year ago as a replacement for VXX. And just to backtrack a little bit, VXX is an exchange-traded note, which mm-hmm. is basically a bond issue. And it was a 10-year exchange-traded note, which is going to expire, I think, the last trading day of January. And in anticipation of that, Barclays issued the next VXX. VXXB, which has been trading for about a year. There's a really good article out today talking about it that I actually tweeted. Right now, all the volume is in VXX, but it's a short-term trading vehicle, so you would expect that. I think as we work through January, it might even be like the last week of January where we see a definite shift from VXX to VXXB. But right now, if you think there's going to be a volatility spike on Monday morning, you want to buy VXX because it's the more liquid of the two. But as you mentioned, it's definitely going off the board. VXXB, I'm hoping I'm around for this one. VXXB is a 30-year note. They decided they didn't want to go through this process once again. So we want, what is 30 years? 2049.
No, 49.
Yeah, because it's January of next year.
All right. Now, how about, can you use Bitcoin futures as an indicator?
I think Bitcoin futures are a great indicator because, because we have two contracts right now, and we're getting, I think early next year we'll have four, including one here. Mm-hmm. But the two contracts that are out now are so different because one is one future contract, or one futures contract equals 1 Bitcoin, that's the SIBO one, and 5 Bitcoin for each futures contract is the CME one. So you see some actual differences in the way these things are used. The smaller contract has consistently been used as a short. You see the short interest that's reported to the CFTC much greater than the long interest. The institutional level one, the 5 for 1 at CME Group, they actually, the last data that we got from last week, traders have actually gone net long. Now, they went net long when Bitcoin was at 3,900, but also it's just interesting to see that institutions have flipped from being long to short, or at least the leveraged money has flipped from being long to short in the big contract. You see a consistent short in the smaller contract. And then one other thing of note, it's kind of a race to who has the most utilized contract. SIBO had the biggest open interest up until just a couple of weeks ago. They were tied, and now that we've had these big moves, it looks like institutions have been getting out of the Bitcoin futures, and the retail is still involved in the Bitcoin futures contracts. So, I think institutions have gotten scared off from the cryptocurrencies, or maybe they're taking it off till the early next year.
Yeah, sounds interesting. Well, thank you so much for joining us at MarketSite, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.